Welcome to my February 2021 market update and 2021 market forecast. I'm pretty excited about this update today. I got a lot of good info to share with you and also give you some really interesting stats for forecasting for this year. So let's jump right into it. Let's look at the sales over the year. As you recall, the sales ratio is the metric we use to measure the activity in the market. Anything from 11% or less in the sales activity or the absorption rate is a buyer's market. 12 to 20% is a balanced market. And anything over 21% is a seller's market. There's upward pressure on pricing. So let's do a quick look at our market overall, see where we're at. From the Market Speedo video, we can see as of the stats end of last month, the upward pressure is still there because the supply in the market is still at a record low. And the speed indicator, 24%. So we are still in a very strong seller's market. And let's go into look at some sales now. Talk at some actual year-over-year stats. Total listings year-over-year for Metro Vancouver, we're at 4898, a little bit more than this time last year. Total sales, 1,171 last month, over 811 same month previous year. Sale price is an interesting one. We'll get into this in a little bit more detail later. Sale price overall up 10% year over year. So my monthly table update, this is some quite interesting numbers here. The sales activity year over year for houses up 68.6%. Now that's the activity, the volume of sales taking place. For townhomes year over year, 42.8% increased sales activity. And for apartment condos, a little bit more than townhomes, 46.8% volume sales year over year. Benchmark price for detached homes up 10.8% year over year. Townhomes up 4.3% from this time last year, and condos up 2.2% year over year. What's happened over the last month? Very interestingly, houses went up 1.4%. That's a pretty big jump for a 1 month period. Townhomes up 0.2% and condos up 0.6%. These have increased from December to January, so from January to Feb, those are going up, and houses, of course, increasing as well. What's driving our market? This has not changed. Basically, money's cheap. We're getting great interest rates out there, historically low. I've never seen these rates in the last 35 years. And in addition to that, savings are up. We'll talk a little bit more about this later on. About 7 times more people are saving compared to a normal year. And the demand for more space is continuing. People are wanting to upgrade from their condos to townhomes to half duplexes to detached houses. That trend is continuing. People want more space. And then the last, and as important as the others, supply is still low. We have not seen a dramatic increase in inventory yet. So there's still upward pressure in the market. The demand remains very, very strong. Prices are continuing to increase. One of the things we talked about, mortgage rates, again, a graph from 2008, you can see the rates that we're at now, below 2%, are giving money away for almost free. So that's really driving our market as well. What happened last time mortgage rates were this low? From 2015 to 2017, our economists at BCREA had a really interesting graph they put together. We had record sales during that time. So same thing is happening now. So the rates, the low rates, are certainly a big factor in our market today. Now, remember this for later on. I'll touch on this a little bit later. Mortgage rate forecast. The rates are continuing to stay low. However, you can see here the forecast from the Bank of Canada is that sometime this year, the blue line, the 5-year rate, is expected to jump. There's a message in there because it only jumps when our economy starts to recover. So there is an indicator here towards the middle half of the year that there's going to be a change in the mortgage rates. We'll talk a little bit about that later. I found this graph from the BCRA very interesting. As you know, over last year, many mortgage holders deferred their payments. This is the mortgage arrears rate should there have not been any deferrals. Would have been close to 1.4% of the people would have been in arrears in their mortgage. However, now, even at the peak and last summer, we were at about 0.4%. So that mortgage deferral program federally with all the banks really did help a lot of people. Again, one of the factors I just talked about is the active listings. You can see our peak back here in 2008, 2009 after the savings loans crisis. We've had a bit of a up and down for a number of listings, up to a peak again in 2019 and a gradual drop of listings as we went through 2020. It's quite an interesting graph just showing that activity of people putting their homes in the market has not taken off. And again, this is reflected. Here's what was anticipated to happen as soon as the pandemic hit. In terms of number of listings going in the market, the red line is actually what happened. So you can see our volumes of listings actually dropped instead of increased. And the average price, if you look at from 2010 to today, and you linearize it, you can see prices are going up. I've put this little red diamond ring just around 2020. You can see there's March 15th, our drop in average price, but a very dramatic recovery throughout the rest of last year. So housing market, mortgage rates impacted by the pandemic. Mortgage rates, as I noted earlier, will begin to rise once that solid economic recovery is underway and people are traveling and eating out, etc. That will boost the economy. That's when the mortgage rates will start to increase. So they're going to increase probably later this year. Housing market, for now, the market will continue to be hot, depending on inventory and the rates remaining low. We're still getting multiple offers. Most of the homes we're selling over last year had multiple offers. In fact, I can't remember one that did not. That's continued last month through January. So again, very hot market. So what's hot and what's not? Let's look at the specifics. Again, remember our breakdowns, the sales ratio less than 11%, buyer's market 12 to 20, balanced, and anything over 21%, seller's market, upward pressure on pricing. So detached houses, west side, we are at 17% as of the end of last month, just dipped below a seller's market. You remember last month we had 22% in December 19. So we've been hovering around that border of a balanced market and a seller's market for houses detached on the west side. Now we're at 17. That will start to jump up again as we go through February. Condos, townhomes, west side, we are at 22%. So just inside a seller's market. That's a dramatic drop, as you saw from the previous month. It will just take a few weeks for the data to start pouring in again and that sales ratio to increase, but we are still in a seller's market for condos, townhomes, west side. Condos and townhomes downtown, we are at 23%. Interestingly enough, a little bit down again from the previous month, but still well into a seller's market, upward pressure on pricing. Detached houses, east side, very strong seller's market again. It will start to increase again. We have that little drop in activity beginning of the year as the market is shut down, and that already started to take place. We will see it increase even further. And last month, remember, we had 43%. So still, detached houses, east side, very strong at 35%, strong seller's market. Same with condos and townhomes, still in a very strong seller's market in the east side, dropping from 45% last month. Again, beginning of the year, and that momentum will begin to build, but it's already at a good, strong seller's market, upward pressure on condos, townhomes on the east side. What's happening in the burbs? Well, we look at month over month variance, and you can see from the previous month, which was extremely hot using the end of the year data, we've had drops predominantly throughout, but again, that's just a cyclical change that takes place at the year end and a slow start to the beginning. And we're also seeing that on attached. Most of the sales ratios are down throughout all of the burbs, but you'll start to see them increase as we go through the year. So this is the interesting part. Let's talk about what's going to happen this year. Everyone's asking, what are prices going to do? Where's our market going? Tell us. So let's share some information that I've got. I'll throw in my forecast, and you'll have some more data to make your decisions with. So BC economic forecast. Of course, last year we had a drop in our net GDP, our real GDP. This year, we're seeing a forecasted recovery in the economy. That's something we're all pretty well aware of. Our economy is starting to boom. I found this slide from Brendan at BCREA very interesting, showing the historical averages. Now you can see active listings are significantly lower than they normally are, and the months of inventory are significantly lower, exactly what we've been talking about. And that's the cause for the increase in the sales trend. So the number of sales is way up because the number of listings are down and the months of inventory are down. This is also quite interesting. If you took the sales to active listings ratio, or the sales ratio that we're talking about, and we've been hovering anywhere from 25 to 35%. If you look at this graph, that can translate to an average price change year over year of between 10 and 20%. We're right here. This is where I'm getting my forecast from for price increases this year. If this trend continues, we could very well see a 15% increase in pricing. So that's quite interesting. So to sum it up, last time I'm going to show this great graph. I put so much time into it. This great graphic, so much time went into this. I'm going to show it one more time. People have saved a ton of money over the pandemic. Banks are giving away free money. That's enabling the condo buyers to upgrade to townhomes and purchase houses. And we're getting that upgrade from each category to the next. And that is one of the sort of graphical representations of what's happening in our market. So vaccines, let's talk about that quickly. The forecast is all these happy people will be getting the vaccine throughout this year. There is the provincial plan to roll out these vaccines based on a number of parameters. The summary of it is by the end of the third quarter, 38 million people, 38 million Canadians should be vaccinated from the pandemic. That's good news, because as the vaccine rolls out, the number of daily deaths, quite a morbid graph, drops dramatically, but that does accelerate our economy and it makes people more comfortable to start spending money again. And there's our provincial plan. As you may know, you're reading about this already. Phase 1 has already taken place. Phase 2 is underway now. Phase 3, where we're starting to hit the general population for folks who are lucky enough to be over the age of 79, are going to be vaccinated in Phase 3. And over the age of 60 are going to be included in Phase 3. And Phase 4, where most of us will fall into, should be vaccinated between July and September. So, and I like the way the table actually gets lighter. We're approaching the sunlight as we get to the end of Phase 4. So again, by September, all Canadians should be vaccinated, and our government's doing a great job in securing all these vaccines from various providers. So hopefully we'll stay on track for that. And that's all part of the economic recovery, consumer confidence, activity in the market, all plays a role in how active our real estate market is. Again, just to touch on household savings, look at this. This is historical household savings over time. Look what happened during the pandemic. It hit an absolute peak of like 27%. On average, though, we're at 14% household savings, which is about 7 times what we normally have. Again, a great stat that Brendan put out in the last update. There is an estimated $75 billion in personal deposits and savings that Canadians have across the country that has been built up, and that is not normally the case. So one of the silver linings of the pandemic is people have put more money away. That plays a role in our recovery in this increased demand right now. Also, remember, this is all part of how we're forecasting. Remember that anticipated increase in interest rates towards the middle of this year. There's a reason for that, because that's when it's anticipated that our economy is start to refuel, recover, start to boom again, and consumption will go up. You can see with the credit cards and the phone and the purses and whatever people are buying, that is going to really be one of the big factors in 2021. You can see for every action, there's a reaction. You can see what happened in 2020, and now we're more than making up for it in spending year over year. So that's going to be part of our economic boom, that unleashed spending. Here's the forecast for this year. Dramatic release of funds that have been built up over the pandemic. And even on the restaurant front, Montreal and Toronto aside, being in total shutdown, Vancouver's bookings are starting to come up, pending any further shutdowns or how the variant does throughout our province. Even the restaurants are starting to see a good recovery. Tourism, which has been completely shut down, of course. A really interesting survey that was just done is 69% of us will travel again as soon as the pandemic is over, which means another big influx of funds into our economy for BC and of course across Canada, and that will also help the economy. Employment, you can see most of the wage tiers, high level and mid-range, are pretty well back to the pre-pandemic levels. The lower wage earners are going to still have a little bit of recovery, but you can see for the most part, most of the incomes are back to normal. And the sales forecast, again, anticipated to grow throughout this year and not as strong the following year from BCREA. And as you recall, from our in-house brokerage graph, we graph the activity every year. Here's last year, which is unlike any other year. But for the most case, most activity takes place throughout spring. That's when most of the sales take place. 60–70% of the entire year's activity can take place in spring. Then it calms down for summer, and typically we get a little fall blip. But bear that in mind as I'm talking about my forecast. So here is what we're talking about. I'm using this new Comet graphic. The summary forecast for 2021. BCREA is predicting sorry, it blanked out there. A sales activity increase of 15.6%. and prices to increase 7.7% this year and only 3% in 2022. CMHC is holding to their original forecast of a peak-to-peak trough or decline of home prices from 9 to 18% this year or next year. And my forecast, I am predicting a 15% increase this year in prices and a correction sometime by the end of 2022 of 20 to 30%. May happen, may not, we'll see. Those are the numbers that are out there right now. Very interesting, pretty well all aligned that there is going to be some adjustments that are going to take place. The only question is how much and when. So one of the things that could happen, just to sort of show where I'm coming from in my forecasting, we got a lot of things. We've got the pent-up buyer demand for space, record low supply of listings. The economy's booming. People are spending. They've got $75 billion that is going to be, assuming they spend it all, released. And that's further going to fuel the economy and buyer consumption. Interest rates are going to, for the time being remain low. So we're going to have a peak activity period, hey, great time for a federal election. Maybe we'll see that. Maybe in April we'll see an election, who knows? But prices could increase with all of these variables and factors taken into account. I predict could be as high as 15%. I think by the end of spring, 10 to 15% increase in prices is a very high possibility. With all of those factors involved, and I think that will happen predominantly through our spring market, because you remember most of our activity takes place in spring. So let's look at what the catalysts are that are going to implicate a possible change in our market. Government introduces, perhaps they've been reelected, now with the majority government, new tax measures. Well, we all know that that's coming. There's going to be some changes. They've got to get that money back that they've been spending, $1 trillion. Government pandemic assistance programs will definitely be ending as we near the end of the pandemic. And remember, the mortgage rates are going to begin to rise once we have an economic recovery. They're automatically tied together. As soon as the economy starts booming, the interest rates will start to climb as well. And then sellers will begin to list en masse, which could spike the inventory levels. So we've got increase in inventory. We've got that dramatic increase in inventory, possibly started by the new tax measures. Interest rates could start to climb up as well. And all of these factors could be the point at which our market takes a turn. So interestingly enough, the buyers will stop buying in hopes of a falling market, and we will see a correction period. We don't know when that's going to happen. It will happen at some point, and prices will drop. Okay, that's a possible 2021 market forecast. I'm Marty Pospischil, and I'm really glad you were able to join me today. I hope you found this informative. If you are on YouTube, please subscribe. Like us on Facebook. You'll automatically be notified when we have future updates. We'd love to have you on the list. Stay safe and stay healthy. Thanks for joining me again.